Ladies and gentlemen, welcome to our final day of this webinar series where we are looking at developing an e-commerce strategy for China. Bear with me as I continue to add people from the waiting room, but very happy to have our guest speaker, Ryan Molloy from RedFern Digital on here today to talk about how to actually e-commerce. And he's going to delve into evaluating marketplaces, going through the e-commerce strategy, going through costs and budgets, and everything else that is around e-commerce. So it's the whole e-commerce world, basically, in China. Just to recap what we talked about in the last 3 days. So on Monday, we were looking at brand protection, analyzing what are your brand assets, going through the process of trademark registrations, and then also what you can do to monitor your brand or any IP squatters or hijackers out there who might be imitating it or taking them onto the e-commerce platforms. On Tuesday, we looked at the different business models that exist, from cross-border e-commerce to direct mail shipping, bonded warehouse, all the way through to thinking about having people on the ground to facilitate your e-commerce strategy. And yesterday we had Annie coming in talking about developing a brand strategy, a marketing strategy towards developing your e-commerce sales in China. And of course, today Ryan is going to sum up everything beautifully in a presentation about developing your e-commerce strategy. Like I said earlier on, please do insert your questions if you have any into the chat box. For Ryan's benefit, Ryan did not join any of the earlier webinars, so it'd be very nice if you could for those who've been joining, re-type into the chat box, and those of you that are new, who are you? So are you a newbie in China? Are you a startup in China? Or are you an experienced China hand? Ryan, if you click on the chat box, you'll be able to see what's popping in. But newbies are those of you that haven't transacted in China yet, and you're looking to understand what the opportunities might be and how to go about grasping at those opportunities. Startups in China are those of you that have transacted either from your head office or directly in China. And then the experienced China hands are, well, the experienced China hands, those of you that have been in China for a number of years. So Douglas is a startup. Bettina, every day a little less of a newbie. Bettina, you've been on this webinar series every day this week. So yes, you're getting more experience for sure. Again, if you guys could be so kind to give Ryan a bit of your profile, I think that also gives him an idea of who's on here and how to gear or steer his own presentation. So Keith is a newbie. Again, don't be shy. I know it's Thursday, but do type in. That's how we interact. How the webinar works. We are here to educate you. We're here to give you ideas and options about how things work in China. For me, there is no dumb question when it comes to China, so please insert any questions or comments into the chat box. If you hear Ryan speaking and you want him to reach out to you, also type that into the chat box, because I can then make introductory emails so that you can contact him straight away after the webinar session. Don't be shy, just type, ask whatever you like. This is a complimentary session, and that's why we're here today. And then from a technical standpoint, we are using Zoom meetings. So if you run into any technical issues, connectivity issues, my only suggestion is log off, log back in, log off, log back in. And if that still doesn't work, just know we are recording today's session, and you can get the recap then up on our YouTube channel later. From a technical standpoint, from Ryan and I, Ryan is a co-host, which means that if I run into technical issues, he's going to take over the show. And he'll stop the share and then share his own screen. And if I run into any technical difficulties, I'm not going to do Ryan's presentation, but I'll entertain you while Ryan has the ability to come back on. It usually takes about 1 to 2 minutes for us to reboot. So again, just be patient, but we will be coming back on here to finish today's presentation. Reminder again, use the chat box for your Q&As. For those of you who aren't familiar with me, my name is Christina Kohler-Colucci. I'm the head of business advisory at Woodburn Accountants and Advisors. I'm a leading expert on inbound investment into China, which means 100% of my clients are foreign investors who are implementing themselves into the Chinese market. And I've got 17 years of on-the-ground experience in Shanghai, doing for 17 years all the work that nobody else likes to do, which is the administrative and corporate functions that companies need to remain compliant in the Chinese market. And if you're interested, I wrote a book. It's called The 9 Superpowers to Succeed in China. It has 9 principles in there with tools and aids to help you to create and design your strategy, your overall strategy for China. It's basically a book that gives you a checklist of what you need to think about and what you need to actually initiate when going into the market. There are a lot of things that people underestimate when they go in. And this book is just basically a very short guide on what you should be thinking about. So you can find it on Amazon, both the ebook version and the hard copy. And you can go ahead and get a copy for that. So without further ado, I'm going to leave everything to Ryan now. Welcome to the presentation on how to e-commerce in China. And Ryan, I will stop my share there.
Brilliant. Thanks, Christina. And thanks for having me today. I'll just pop up my screen now. 1 second. Okay, can everyone see that okay?
Now we can. It's
all right. Excellent. So thanks everyone. Today I'll be going through developing an e-commerce strategy in China. The presentation is going to be quite holistic and it'll take in a lot of different elements that you need to take into account when operating e-commerce stores in China. Obviously, from a media perspective, it's important. Also, other things that you might need to take into account when setting up your ecosystem. I think a lot of brands just look at it as a Tmall kind of setup, and then you have your flagship, and then away you go. Whereas there's a lot of different things that play into that. So I'll first look at the opportunity. Obviously, e-commerce, China is leading in terms of total value globally. It's not something that we're seeing change. It's been obviously sped up by COVID-19, and so the opportunity, especially for I think foreign brands, is huge because of the way that it functions, the way that you can see brands more visibly through e-commerce, and also the way that you can target, for example, premium shoppers. There's lots of opportunities there. In terms of, I think, selecting the right marketplace, that's something that often brands will struggle with. It's much more simple outside of China, but obviously there's about 7 or 8 different platforms to look at. Which one, what level of investment is needed, which one would better suit my category. And then also in terms of the strategy and execution, how do you then grow your brand across then platforms, costs and budgeting. And then I've put in a few case studies of what success looks like and how to get there. So I think the first few slides are quite straightforward. It's demonstrating essentially where e-commerce has come from. We've been operating RedFern Digital now, I think it's well into its 8th, 9th year. So when we started out, it was quite a much smaller opportunity on e-commerce. And the development over the last, say, 6 years has just been incredible. I mean, even the 618 results, just talking with other TPs and Alibaba, they've far out exceeded last year's. 618 was always kind of this tester for the big Double 11 sales that most brands would carry out, so then they could get their strategy right for later in the year. And it's now become probably, I would say, definitely a contender with Double 11 and Double 12. So that's definitely representative, I think, by the GMV increase year on year, and then also the digital transformation that we've seen. The major thing in COVID was prior to COVID, a younger demographic was most frequently shopping online, but as we moved out of COVID, it became an all demographics game, right? So we had all demographic shopping, and the only real difference was certain platforms would cater better to certain demographics. So that then came into play of which is my right platform. But you can see here in terms of internet users and the growth, also the acceleration that came through from COVID, and the penetration as well. The way that the platforms have been developed in China, there's always a platform that will suit someone, right? In terms of what Pinduoduo has done, they very much helped with tier 3, tier 4 cities. The same with Kuaishou and these other platforms that cater to them level cities, and then with more developed tier 1, tier 2 cities. We've then got the Tmall, JD obviously playing into their demographics. So penetration has continued to increase. And what we see generally is that consumers move along that line. So Pinduoduo will be the first point, Taobao, and then they'll move on to JD and Tmall. And that allows for an increasing penetration rate in the market. And then if we look at why is it important for brands, you know, for a lot of categories, it is essential to still find a distributor in market, establish yourself here and have the offline play for sure. But it's become almost a little bit of a reverse of what it used to be. So it used to be the case that you needed online to help you sell better offline. That was essentially what we used to do three or 4 years ago, right? So you'd find a distributor, sell your products in China, and you'd use your flagship as kind of a validation for your sales offline. And what we're finding now, which is quite funny with a lot of our brands, is that we're selling offline to try and help validate online sales. So we're doing sampling, we're trying to get products into stores so that when consumers see it and try it, because the product will stand out, we'll try and do tastings, different things, they then will go online to actually buy the product. So the reverse has happened, and that's something that I think either way you look at it, e-commerce then becomes very important. Especially when it's for premium foreign products that might be quite hard to find offline. The automatic thing for most consumers to do is to go onto Tmall and have a look if that product's available. I mean, that was really the start of the Daigou trade and Taobao, and how a lot of sales come through from different countries, because people know that I might not be able to go to the store and buy this particular product, but if I go online, I will find it somewhere, right? And so for premium foreign products, it's really become a hot spot for them. In terms of the e-commerce landing page, so a little bit on kind of consumer behavior. Obviously, Google plays a very large role in Western marketing and .coms and websites, because of search mostly goes through Google. With China, it very much goes directly to the EC platform, which cuts out Baidu. The long story, Baidu and Alibaba had an argument, and Alibaba wouldn't let Baidu index their sites. So then people's search behavior actually changed to go directly to the platform. That means that the landing pages have become increasingly important. Different types of displays, home pages that you can put on your Tmall store. They hold a lot more value than they would say on Amazon, just because that is becoming the main source of information and really the website, you could say. In FMCG, for example, I'd say most of the brands that we work with don't necessarily even have a website. They'll do a lot of design around their Tmall store first, and then later, once they've built their brand, they'll set that up to validate the Tmall store. So that's one element as well that I think is very important. And also when you're trying to target very niche and specific audiences. So we have a tea brand that we sell from the UK that is quite expensive, definitely far more expensive than tea is in China, but it has a similar proposition. We knew that this tea would struggle when it's up on a shelf against another British tea, which is cheaper, or against a local tea, which would also be a loose leaf variety. So what we did know, that there was a very specific audience that was buying things that were quite minimalistic and artistic, that would also be into this type of product. It's sustainable, the packaging is beautiful, it's very much a lifestyle product. So what we can do with e-commerce is we can target these specific demographics. So there's a number of ways to do it, just through old school, putting phone numbers in through different buying facilities and then putting them into the system, or there's retargeting, or there's also media that you can use, right, and particular associations. So being able to target these audiences is something that's very important for a lot of brands. The nationwide touch points, I mean, trying to get offline distribution across the whole of China, I think even within 3 years is something, it's quite hard and it can be difficult. And it's not necessarily needed, but for some brands, we do find that they will do well in particular regions, that offline distribution can often be quite hard to spread out, and then finally realize 2 years later that actually the south of China sells the product much better. So the data that you can get is very important. And it acts as brand validation, as I mentioned before, for both offline and online shoppers. So it helps not only with your sales online, but offline as well. I think the key kind of competition that comes through, so the key challenges is really around competition. There are a lot of brands on the likes of Tmall. There's a lot of mini programs. There's, you know, there are a lot of brands trying to fight out in this space. So there needs to be a decent amount of investment that goes into running these types of stores. That's something that I think is important, and at least being able to provide some type of differentiation as well that can help you grow in your category within the stores. Communication and positioning is very important. We found that with our competitor brands, they'll go to a really, quite far in terms of claims, probably too far, I would say sometimes in terms of what their product would do. There isn't much regulation on yet in terms of on e-commerce. So what's happened is Chinese consumers have become quite used to having, this will solve this problem, this will have this function, this will help my life in this way. So I wouldn't say going that far is needed, but you definitely need to sharpen USPs when looking at the market. Omnichannel approach is the way to go. Sometimes we start out with just like 1 or 2 media channels or EC channels, often one, and then we'll find later that actually the product would sell quite well on others. So if you have a budget trying to work across a few different platforms, especially if you're on social commerce, innovation is very important. So NPD, so any kind of new product development really helps with e-commerce. So fans of stores love it if there's a new product that comes out, and it really just helps boost the sales of that product and also your previous products. And then renewing your brand strategy. It used to be every 5 years for brands, and really now it's 1 to 2 years. And to be honest, I'd say now it's probably 6 months. Being able to take data and realize how things are changing and trends, and then apply that to what you're doing with your products is very important, because you can roll out a product in e-commerce within a couple of months, right? So I think that's an important thing. And then also the different platforms do have different functions. Some categories such as fashion, we would never put on JD, right? And then some other products that are more appliance focused, you might look at JD as an option, even though the market share is significantly bigger now for Tmall. So I think understanding that is an important part. So in terms of selecting the right marketplace, the first question is obviously cross-border versus the domestic channel. And there's not really a right answer to this. It really comes down to the products that you're in. Some products need to go through registration. We're looking at nutritional health. We're looking at infant milk formula. And so with brands often that are going through that, they might start their registration and then go into cross-border and then run their sales until they can then bring the product into market. So cross-border for cosmetics and some other cosmetics, nutritional health, IMF is really a no-brainer, especially for a starting point. And then for domestic, really, you're looking at whether you really want to have some offline presence, right? So any of our brands that are in snacking, food and beverage, they'll often also look to have an in-market play, right? So that they can have that kind of offline and online play together. So I think that's kind of the major decisions. And then with cross-border, it has then become focused on particular categories. So mother and baby, cosmetics. Chinese consumers are very kind of used to going through that experience and buying them categories on there. Whereas with domestic, you're opened up to pretty much every category you can think of. So I think these are some of the questions that brands need to consider. And obviously the route for cross-border would be recommended through the free trade zones. So bringing the product in and then storing in the free trade zones. And there's stepping stones. If we look at, for example, the majority of our clients, they would start with cross-border, build up their sales, build up their representation, build up their media, and then often they'll then open up a domestic store to complement that store. They don't have to fight with each other. They can very much be two different stores that are trying to grow the brand for the same purpose. And this is kind of like an overview, I guess, of depending which one you choose, what options you then have. Mini programs have a lot of hype at the moment. They are super easy to set up. They can be done in a few weeks, and they're very accessible, right? The only issue with mini programs is it's private traffic, so they're very hidden within an ecosystem. So when brands are looking at cross-border versus domestic, the next question becomes, okay, do I want to go private or public? Private traffic essentially is your websites, it's your mini programs, it's your own kind of store that you have created in some form. With China, they can be quite difficult. They're quite good if you have a presence in market. We've created some excellent mini programs for brands that have offline stores here, because people can come to the store, they can buy the products, they can scan, and then they can go home and buy another product without having to come back. So mini programs can have a core function for brands, but through cross-border e-commerce, generally although they seem quite inexpensive to set up, there's a hefty kind of cost that comes with actually generating traffic that goes towards them. Your public for cross-border is a little bit different. You've essentially got your own flagship, so Tmall or JD flagship. The Daigou channel or the parallel import, as it's known, it's a little bit tough at the moment, but this used to be quite strong for a number of countries. But right now, it's usually used as a marketing point. So having discussions coming through the Daigou channel generally shows that the product is renowned, is well known, or is liked in its home country. And then you have online retail. And that's where essentially you can work together with JD and Tmall, or you can work with particular retailers that will put your product in their store. So that's kind of the cross-border options that you have. Public generally is a more expensive upfront cost. You're going to have to put down deposits for Tmall and JD. You have to pay for tech fees. You have to then get a TP, but the return is higher, right? So it really becomes a discussion of budgeting. And do I want to dip my toe in the water and try through a mini program, or are we going to try and take are we going to try and take on a bigger play and really then go through Tmall or JD? And domestic is similar but a little bit different. So if you have your brand set up here, obviously mini programs are generally more effective, I would say, than cross-border, because you can do lots of different things with O2O. With regards to public as well, you also have the option, if you're in certain categories, to work directly with JD and Tmall in the hypermarket mode, where they will put your products onto JD or Tmall Super. Then what happens is you have to provide them with budget that they will put in to support your products. And JD and Tmall Super, we get really good sales for some of the brands that are in market. Obviously, it's not a flagship. You don't own the listing there, but it is an option for brands that aren't yet willing to go to the flagship kind of period. And then you have vertically integrated platforms. These are different platforms that would have offline and online. In mother and baby, you've got Kids Want, Baby Max, Baby Tree. They've all got platforms and applications for mothers, but then they'll also have offline stores. And these can really be only accessed if you're in market. And so if we look at the different platforms, I think I've already really talked through these, but your large B2C platforms, advantages is the high traffic that they have. Disadvantages would be the high costs generally and high competition. Websites would have quite low volume traffic for China. It's more B2B. A lot of brands that we work with from a B2B element, websites have an important play. Because obviously you're looking more for lead generation. Social commerce, it really depends on the product itself and the customer. Because if we look at, for example, Little Red Book, it's 80–90% female users. So you're going to be picking particular products that fit that, that consumer, cosmetics, fashion. Whereas if you go into other types of social commerce platforms, such as Douyin, generally you're targeting a younger demographic that probably doesn't have as high a purchasing power, right? So snacks and different things like that. Alcohol is one of the things that does quite well in Douyin too. So, and then mini program as well, as I mentioned, it's brand owned. It's yourself, it's your own platform, but low traffic volume and essentially high cost because you have to pay a lot for the traffic to get through. And then there's other models like the distribution or hypermarket. These are very low cost. This means essentially a distributor will take over your Tmall store, your JD store, your mini program. They run it through for you. Low cost and essentially low risk from a financial perspective, but low brand control can also be quite a high risk because we've got a number of clients we've worked with that we're working with that are in market that they now can't get their Tmall store back. So that's one thing as well, just to be careful of when going through that option. It seems very attractive because essentially a lot of the costs you don't have to put in there. They'll take on a lot of the risk, but then if it does go well, 2 years down the line and you want it back, it can often be quite hard. And then the question is like, do I need a flagship store? I think that's the big question. They aren't cheap, and I think every brand asks, I want to go into Tmall, I want to be on JD, but I don't know if I want to take the step of having my own flagship store. The benefits is the data, right? You can have your own followers, you can retarget particular followers. The in-app and the in-app marketing that you can use is very strong. You can't get that through not having a flagship. If you list on someone else's flagship, or if you go on JD Super, you're not going to get any oversight into how you can push out marketing. It is more expensive. It's great for branding because you can essentially put all of your USPs, all of your landing pages across it. And in the long term, there's higher returns. But if you go onto the retail specialty or shared, which is you might list on a number of different retail platforms, or you might work with Taobao merchants, this is much lower costs, but you'll get very little data and oversight. So we do have clients that we support on a media perspective where they're working with distributors and Daigos, and they'll have maybe 300, 400 listings, but they have very little control over what's happening with them listings. So we have to go through every month and look at the sales numbers and figure out which one's doing well and which one isn't, because essentially that volume just gets pushed through. And the volumes can be still quite good, but it's quite difficult to turn the ship around on pricing and things later if you take that route. Yeah, and then in terms of e-commerce mapping, a lot of things that I think, a lot of things can be done as a brand really by yourself sometimes, or you can get an agency to help you look through Tmall. One thing that's great about Chinese e-commerce is everything is so visible. The monthly sales are there, the comments, the feedback, the sentiment. So you can very quickly go onto Tmall and do it and pull some data and try and understand who's selling in my category, right? So if we looked at gin, what other kind of niche gins are selling online, which ones are selling well, then you can go over and look at media and you can map back and you can see, wow, with this particular brand is doing a lot of Little Red Book seeding, right? So they're doing a lot of activity on this particular platform. I can see that their sales are doing better than the other competitors. And you can almost figure out how brands are operating online. And I think that's one very important thing in terms of e-commerce mapping. And then, so if we look at the entire ecosystem, this is a mixture of e-commerce platforms and media platforms. The reason why is many of them you can essentially sell through. So we have Tmall. Tmall is usually the go-to for brands. That's the one that we would say that you start with. It does have the highest market share, and from an investment perspective, it does have the best ROI, just because if you look at, for example, live streaming crazes or different things that are going on in China, they're all very much integrated into the Alibaba ecosystem. It's quite easy to deal with because they have a logistics provider, Tinyao. And if you work with Tinyao, then if you later want to set up a Kaola store or a Suning store, it's all linked, it's all part of the Alibaba platform. So that's one thing as well that can make things quite easy. You can have 3 or 4 platforms running at the same time, and it lowers the cost. You don't need to have different logistics providers. So Tmall Global is usually the go-to. JD would definitely be the runner-up. JD is good for certain categories. JD doesn't have very good promotional tools within their platform. So what most TPs do is they'll use the likes of Wechat and Douyin and Kuaishou. Actually, Kuaishou, they have a partnership with JD to drive traffic to that store instead of using the promotional tools. JD live streaming isn't really a thing. So that's a little bit different. Then you have Kaola. Kaola is very much a cross-border store, so it's the second biggest. It was quite close to Tmall. They're always battling out, but now it's been acquired obviously by Alibaba. For cross-border, it's quite good. Again, they have their own store marketplace model. You have Little Red Book. Little Red Book is very good for marketing. Probably out of all of the media platforms this year, it's probably taken the most investment for the majority of our clients. If you're looking at lifestyle, premium types of products, mother and baby cosmetics, Little Red Book is quite good. They've had a number of new rules that came into place this month that have made advertising on the platform quite difficult. So if any of you are having issues with Little Red Book, everyone is. It's not just you. They've made it quite difficult to, for example, do KOC seeding or sending out products and build word of mouth, and they're pulling down lots of posts. So they've become very particular on the type of content you can post right now. So in order to post, you have to work with a vendor of Little Red Book, and you have to be able to put a lot of the content through them first, and that will ensure that it doesn't get taken down. As a store, they can be a very good starting point, but only for certain categories. Mostly cosmetics and fashion is the main ones. Kuaishou is the most overlooked platform in China. Kuaishou actually has around 24, 25% market share of live streaming revenue in China. To put that in perspective, Douyin, which gets quite a lot of hype, is about 3%. So from a live streaming perspective, Kuaishou is very powerful. And actually, when we met with Alibaba back in February, it's the #1 driver of sales to Tmall. They do have a link together with JD, so sales of JD is even better, where you can actually list your JD products in Kuaishou. Douyin is the video sharing platform of China. It's good, but it's all about entertainment, right? So if you're doing things with Douyin and you're trying to link this to your EC stores, you can, but it needs to be something that's going to drive value, or if not, the ROI is quite low because Douyin is quite expensive. And then Wechat, obviously, it has many programs that you can sell through. Generally, it's quite a closed ecosystem, but it is an option for brands that are looking to dip their toe in the market. So I think I've already ran through these, but Tmall generally, also known as the #1, it's really the place to go for most brands from a B2C perspective. Tmall Global is CBEC heaven. That's pretty much the best platform you can go through if you want to sell cross-border. JD is often the next jump in terms of, if we're not going to Tmall, then I'll look at JD instead. JD Worldwide is quite small, it's niche, it's not as big as Tmall Global, but it suits certain products from our data, just different things like childcare accessories, toys. They generally seem to sell quite well on JD Worldwide. And then Localize is obviously another CBC opportunity that often will link together with Tmall. Yeah, so if we look at social commerce, we've got Little Red Book. Little Red Book also is a cross-border store in terms of sales. And so, but again, a lot of the categories I mentioned before, it's very lifestyle, very beauty and skincare focused. Douyin are heavily investing in their e-commerce store. So for any brands that are inside China, it's got a Luban store, which is very, very useful. For a number of our alcohol brands we work with, we started opening up Luban stores, and we find that actually some of the sales that we get through there are better than Tmall. So Douyin now actually offers a great opportunity for brands. Their cross-border initiative, we've been told, but again, it could be a rumor, is going to be coming through in the next 3 to 4 months. So Douyin have said that there will be a cross-border option for their stores, but as we know, as of now, it doesn't. So it's really for players that are in the market. The other issue with setting up a store on Douyin is registration and licensing. You have to have a China entity that has the license to sell them products. So it's another thing as well for some brands that can be a little bit difficult, especially when we look at even opening a Douyin account without the store for some categories like alcohol, mother and baby. If you don't have an entity in China that can that has the license to sell them products, then you can't open a Douyin store. So that is one of the limitations that come with this platform. And then Kuaishou is very much live streaming. I wouldn't use Kuaishou for anything else, but for really driving traffic to your EC stores, especially JD. And the Wechat mini program really becomes the CRM. It's good if you have a presence in China already. It's good for building up connections, doing things that are really cool and customized. I know a beer brand, for example, in the market right now that have started doing personalized names on beers, where people can go in and they can essentially get a name written on their beer and it gets sent directly to them, right? So that's an example, and it's doing quite well. It's quite a profitable venture that went through a mini program. So if we're doing something like that, then this is where mini programs can be very useful. The customization offers a lot. And then you've really got two choices when you're looking at a Wechat mini program. And as I mentioned here, they're nimble but hidden, right? That's the major thing with them. You can either fully design your own mini program, which means you own it completely, but that can be quite expensive, or you can work with a provider like Yodan. There's about 3 or 4 major providers, Yodan being the biggest, and essentially they have a SaaS model where you can rent it. And I think the annual fee is about 7,000 RMB, so it's not too much. And then there's other platforms as well. If we look at New Retail, you've got vertical platforms I mentioned before. New Retail really is if you're in market. It's the majority of volume that we're seeing now is going through New Retail. So like Hema is the greatest example of that. Anything that has an application that you could then buy online or has that O2O element is what we would define as New Retail, that integration. And this is now, it's kind of sweeping across all of the offline stores. Even the likes of Walmart now have and it's called Dada, as an application that allows you to order from the store rather than going to it directly. So that's a big part of what's happening in China. Vertical platforms, but again, if you're in market, the likes of Kitwant, and then group purchasing platforms as well. So we've got a number of different ones. Pinduoduo is the kind of the major one that's more focused towards tier 3, tier 4. And then you've got also the likes of group buying and discount stores such as VIP.com as well, which are good, but they're more for clearing stock. So a lot of our brands that say we have this amount of stock that's going to expire in 6 months, they'll then use them platforms to really just kind of get rid of that stock. Not something we'd always push, just because if it isn't about expiry, you can end up with a lot of, and there was an alcohol brand that did this, and they had, I believe at the time, they ran a particular thing on VIP for about 50,000 bottles. And they now have an issue with pricing, because obviously all of that went out into the market and then got sold back into retailers. So that is one thing to be careful with when it comes to VIP.com. And yeah, these are generally the deposits. They do range a lot. So if we're looking at, say, infant milk formula on Tmall, it's around 300,000. If you're looking at more general food and beverage, it's about 50,000 RMB one-off deposit. And then you have an annual service fee, or the tech fee as it is. With the deposits, you do get it back. I mean, I hope you don't, because it means the store didn't do too well. But it is something, it generally was originally made for IP. It was around the fact that if you were selling fake products and you then had to go to court, then this would be taken off you or held by Alibaba. Now it's more just to make sure that if you do close your store, that all of the logistics costs and things are paid off. So some of the other platforms do have lower annual service fees. So that can help in terms of the transition and moving on to the platforms. But again, with most brands, if you're looking at the sales that you can get through Tmall Global, we're talking 3 to 10 million RMB first year. And then after that, it can be more, multiples of that. So if you look at it from that perspective, the ROI is going to be higher on Tmall Global, and that really becomes the play. What we find is when we open stores on Kaola and these other platforms, it almost actually drives up the sales on Tmall, because a lot of people will go on Kaola, see a product, they then go on Tmall, check the product, and they'll buy whichever one's the cheapest. So that's another thing. Once you have multiple platforms, is pricing and how you deal with discounts and the kind of the various structures that you have. And then you have private traffic. So I think I've already discussed this, but this essentially is mini programs, right? So private traffic is your own, it's easier to have, but you need to do a lot of work on Wechat, Wechat KOLs. Essentially with mini programs, you have Wechat KOLs and mini program ads only. Outside of that, moment advertising is very expensive and not very effective for driving sales. With Yodan, they have the ability to connect to Kuaishou live streaming, but you have to be on the Yodan platform to do that. You can't do that through normal mini programs. So driving that traffic to a mini program can sometimes be a little bit difficult, and generally there still is some apprehension by consumers to buying on private platforms. So I think so yeah, in terms of the strategy and execution, then you have the pre-entry considerations. So the major ones would be kind of, what is your category online? How well is it doing? Who are your current competitors? Who is your target audience? What regulations apply to you? What is your product service and what is the positioning in the market? And what platforms are available and best suit your brand? I think this is generally the way that you should start to look at the market if you're looking at an e-commerce entry. With regards to, we just ran an accelerator for a number of brands from a certain region in the world. We've done it over a year, and the amount of regulatory changes when you're dealing with 20 brands trying to sell them cross-border to China is unbelievable. And some of them favorable, some of them meant that certain categories, none of them were blocked, but it meant that they had to change the approach, the platforms they were using. And in terms of over that year, just seeing different competitors that we pulled on data in the beginning, and some that had done so well, some that had exited, some that had really not quite got the positioning right, some that had, some that had really, developed onto other platforms and found them to boost themselves and grow themselves in the market. That was very interesting, I think. And so these are things that you need to take into account, but also reevaluate. And then, so then you've also got how will your brand fit into the life of the Chinese consumer? I think that's, for me, the major one, right? It's in all of what you're you're putting forward. It's how in the beginning do you get first-time trial. And from that on your store, you can see from the data repeat purchase. So the first point is, can I get the first-time trial? And if you start to see solid repeat purchase, that's where you should really start to scale your China operations, because there's an opportunity there. And that's where, for brands in the first 3 months, we're really looking at that data to see the repeat purchase rate. And does your brand need to localize when it enters the Chinese market? Definitely. But it's a bit of a mixture of, you don't want to change everything, right? So you want to make sure that your brand is recognizable. You want to make sure that when there's Daigou or there's other cross-border Taobao merchants that are selling from your home country, that they can create that connection. That's important, but you will need to change elements, right? It doesn't mean changing the packaging or everything. It just means bringing out certain USPs that don't fix what isn't broken. And what reputation does your brand currently have in China? That's an interesting one. I was talking to a friend of mine who works in another TP, and he was mentioning how he reaches out to brands. And it's actually, I think, what some brands should be doing in reverse. It's going onto Taobao and Little Red Book and seeing a brand, say from the US or Europe, and realizing, wow, these guys are doing really well online, and I don't think they know it. And then reaching out to them and then saying, look, do you want to set up a flagship? Because there's obviously potential for your brand in China. A quick search online can really, for some brands, reveal stuff that you didn't know, and there might actually be quite a fair bit of buzz around your brand. So I think that's something as well to take into account. And if there isn't, it just means that maybe it hasn't yet been picked up. There still are opportunities, and you can learn from brands in your category that are having a lot of buzz through the Daigou and KOL channels. And then in terms of assessments, I think the most important thing is always being able to go back to looking at your strategy and changing it, and being able every 3 months to think, look, are we doing the right thing? Are we achieving what we wanted to? And preparing for that next period, right? So every brand, I think, will at some point hit the targets they wanted to, and it feels great. But you have to remember there's going to be some kind of NPD in 6 months. That's just the way this market works. So being able to develop new products, you know, how do you extend your offering? A big thing we're doing right now is like gift with purchase. So coming up with really cool brand ideas and having it manufactured. And the great thing about selling in China is actually having gift with purchase manufactured is quite affordable. So, you know, different things. If it's mother and baby, how can you create a toy line that would go together with your infant nutrition? If it's cosmetics, how could you create different types of lifestyle apparel and things that you could bring together with that as well? So for each category, and then if we look at food and beverage, you know, looking at tableware, different things as well. So there's a huge line of other products that you can bring together to really kind of add value. So that reassessment is very important. And when I mentioned about localization before, the whole idea is don't fix what isn't broken. But I think USPs need to be stronger. Often outside of China, brands will sell well because they'll have a number of set values that really a person can relate to. It will look great and the price is right. And that's enough often for people to say, I'll give this brand a try. But with China, there is more of a functional ingredient focus. I'll give you an example. In cosmetics, we find that instead of it being about the brand and what the effects should be, a lot of female consumers are looking at exact ingredients, right? That they know will work, or they've had before in other products. So a lot of searches on Tmall are actually not done by brand. They're not done by product category. They're done by ingredient. So if, for example, there's a cosmetic brand coming in with a particular ingredient that you know that Chinese consumers are already into, you can use this in terms of really bringing it out on the page and really helping that stand out, using it for SEO, different things like that. And then why is building a community online important for brands? So I think customer loyalty, it's easier to get someone to come back to a store and purchase again than it is to get them to go to a particular store downtown and then buy again. So customer loyalty is generally higher. If you have certain people that have bought through your store, you can send them notifications of reminders that you're still there and you can buy again if you would like. In terms of obviously brand awareness, internet word of mouth, and then longer term success and direct engagement. A big part as well that our customer service team will go through is just generally the discussion that they'll have with people that come into the store and they'll see a product. And it's very different to say Amazon, where customer service is more about, where is my product? It's been 6 days. The customer service will often be, where's this from? How long has the product been in the market? So quite personal brand questions, actually. And that's always quite interesting. You can build that relationship and you can bring across what the brand stands for, why they should purchase it, and you can even provide instant coupons as well for them to use. And I think when we look at, okay, so that's generally how it falls together. There's then also the key opinion leaders, KOLs. KOLs, essentially influencers, are a big part of the market, whether it be on live streaming, whether it be on more traditional media. They very much help in terms of driving sales. They can be split into three segments. We usually split them in, to be honest. You could bring the third one, which would be celebrities. So you essentially have celebrity KOLs, you have what we call mid-tier KOLs, and then you have KOCs, which technically aren't KOLs. They're everyday people who have over, say, 5,000 friends. They're relatively popular, and they like to talk about certain things quite a lot. So they're quite good for spreading word of mouth. And often on Little Red Book, we'll work with them quite closely. With your mid-tier KOLs, they're more about generally bringing through sales, so linking through your store and trying to generate more traffic to your store and more first-time purchase. And then you have the celebrities. Celebrities generally are more of an IP thing. So if you open a Tmall store or you're making a play in China, it's about how, making a contract with a celebrity, which they're not always that expensive. There's some celebrities we've worked with that would be in the higher level where you're looking at maybe 150,000 RMB, 200,000 RMB for, say, 6 months to be able to use their image. The benefits that you can get from that is great. If you can put that all over your Tmall store, on your products, or your POSM, it's very useful for trying to drive brands, especially in categories that can be quite hard to get lift off with. That's something that we'll often look at. So they're really the three elements. And the question, I guess, being is, are they worth it? If we look at other types of paid media in the market, they are definitely the most effective. The one issue is that they're, without a doubt, 34% of all likes, shares, and followers in China is actually zombie. It's fake, right? So this is another issue that you get that comes with working with KOLs. It's important to do really solid due diligence to understand, looking at their previous posts, working with agencies to understand and pull telecom data to see real followers, and just look for things that don't look quite right. That's something that's quite important because you can end up spending quite a lot of money and really not getting much in return if you're working with KOLs that generally don't have that many real followers. What we generally do in the beginning is work with more associations or accounts that are for cities or they're for particular causes, because generally you'll find that all of their followers will be real. So we'll often do that with in the beginning with newer brands and then move on to more personal accounts at a later time. And these are kind of the different levels of KOL. So you have your micro, your mid-level KOL, and then also your top-level KOL, and they all have different prices. Douyin is the most expensive at the moment, and then in terms of Wechat would probably come in second, then Little Red Book, then Weibo. Douyin is great for certain categories, as I mentioned before, because the cost per engagement is the lowest in the market across all platforms. So Douyin is great if you're trying to reach a lot of people. But average KOL on Douyin of mid-level is 80,000 RMB, so it's not a cheap exercise. So it's something where brands have to consider what is their budget, who is their focus, and then maybe look at Douyin, because Douyin does get a lot of hype, but in our opinion, it also comes with quite a hefty price tag. And then so the checklist for working with the KOL, this is really kind of all of the different things to go through. When working with a KOL, one of the things is, and I wish you could, but you can't go back in time. So once you've gone through and you've posted away, that's a situation you've got. So making sure that the mechanism's in place, making sure that this is the right KOL is super important. And often when we run campaigns, we'll work with a brand on an overriding theme with 5, 6, 7 KOLs at the same time. So you need to make sure that all of these KOLs are interlinked. They understand the campaign. They understand what the brand represents. They understand whether that should be linked with EC. And that's very important. I think one of the major things, just on that point, is because of the segmentation of all of the platforms in China, if you do if you only have a Tmall store, you only have a Kpis store, and you do a campaign with KOLs, a lot of consumers won't know where to buy, right? Tmall generally will see that people will trickle through because it's a number one platform. But if you're on a smaller platform, you need to link to what you're doing with KOLs, right? Just because if not, consumers generally will get quite lost. So checking the match between the brands and the KOL in terms of the content, the style, and the target audience, that's also very important. There needs to be that match. You can ask also for the demographic data for KOLs. They will provide it. It's a little bit stubborn at times, but they do have this data on their back end. So that's one thing you can check to make sure that is the location correct? Is it the correct gender? Is it the correct age for what my target is? Checking the platform versus KPI to aid in KOL selection. So that's another thing. Not all platforms in China will link, right? So you can't link WeChat with Tmall. You can't link a number of platforms with each other. Douyin now also is stopping itself from linking to certain platforms. So when we look at that situation as well, you kind of need to think, okay, I'm selling on this e-commerce platform, and then you work backwards to what type of media platforms you should be pushing through. And then in terms of KOL posts made check for fake buying views or comments, there's plenty of tools out there to help you understand sales by live streamers. So if we're talking about live streaming as well, that's another thing to watch out for, because even celebrity live streamers sometimes can give quite bad returns. And then also ask for things such as click-through rates, ask if the KOL is willing to do part commissions that can bring down the initial base costs. And then also, don't be afraid to ask other brands that they've worked with from different categories, obviously not competitors, of their experience of working with the KOL. That's something that we'll often do, just to make sure that, was it a good campaign? Did it go well? And so the next part is part of the KOL, I guess, world is live streaming. So live streaming for e-commerce is probably the most important element to help a brand move through the different store levels. If you look at Tmall, for example, they have 8 store levels. I think, yes, it's 8 store levels. And so the first level is essentially for brands, all brands in the bottom 40%. So maybe there's 600 brands in a particular category. And then if you're level 1, you're in the bottom 40%. If you're level 2, you're in the top 60%. Level 3, the top 40%. And that's how that works all the way up. The problem is that it's a very chicken and egg scenario, because a lot of brands will enter Tmall, but Tmall won't give you attention until you have higher sales. You can't get higher sales because Tmall are not giving you attention. So this is the number one problem for all brands on Tmall. Same on JD, same on all the And so the major way to get around this, and what a lot of brands do, is they'll contract.
Ryan, apologies. Can you unmute yourself? I was just muting everybody else.
No worries. And so one of the major ways to get around this chicken and egg scenario is to contract live streamers and to work with them to try and understand first what type of return they can give you. And that can bring up the sales in your store, which will then give you more leverage of Alibaba, which then can help you take part in the bigger festivals. And so it's really driving to a point month on month. One thing with live streamers, you're generally better to work with larger ones, but then again, the chicken and egg scenario, larger ones obviously won't, in the beginning work with brands that just go on Tmall. Usually they would like to have 300 to 400 monthly sales on a particular unit as a minimum, right? So it's often a case of trading up to larger live streamers within your first 6 months on Tmall and JD, but they are very useful for initial stages of trying to drive product sales. And these are the 2 biggest ones. So Via and Austin, there's Cherry, there's some other ones that they're very big, but Via, so it would have been last year, Via sold more product than the whole of Carrefour in China nationwide, right? So it's quite an intense the amount of product that these live streamers can move. And they're actually now, there's quite a lot of government involvement with them because of the actual power that these live streamers are having for brands. It's become almost political, we could say. So it's quite a lot of sales, and that's definitely something that we work, when we work with brands, we're like, look, The goal for us is to work with VIA in 6 months. How do we get to that goal? And then so the consumer purchase cycle, this is another thing. Like things don't always just happen in the beginning. It does take time with e-commerce. So we'll tell a brand, look, we're trying to hit 5 million, 6 million GMV in the first year. And then the question becomes, well, the first month we did 40,000. How are we going to hit that, Ryan? It does take on average 8 times that a consumer needs to have some touch point with your brand on average in China for them to purchase. So generally what we see is over the months, it increases, it gets better and better and better, and then you go into the larger sales festivals. So things do take time because of this. And that means it's important to be retargeting on Tmall, to be working with specific groups or associations that are really your target, and to be pushing the product again and again and again. And then so we're looking at budgeting for market. This is always a very difficult part, I think, of what needs to be done. So budgeting breakdowns really, yearly budgets range from like say $100,000 to $2 million, and it depends what you want to do. The major thing is if you're looking at e-commerce, it's a number of platforms. So start with one, try and get a TP that would have a reasonable service cost, and we'll do more on a commission. And then basically it's understanding, how much do you want to have in terms of ownership of platforms? So you might have remembered in the beginning, I said that the one option is that you get your distributor to take ownership of your platforms, and that will definitely lower your costs. Downside is you would never own the platform. So you need to make sure you have a very good relationship with them. And that is really where you want to, and then you have trust in that relationship and that can be built well. But if not, it's going to cost more if you want to have ownership, the number of platforms, and then also your desired reach and in terms of sales. So this is also a budgeting for market, and this is purely for e-commerce. So this doesn't take into account offline trade budgets for distributors, IP, administration, entity establishment, and also other elements of research that you would need to do to support that. But this is purely if you're looking at e-commerce, how we would split up a budget. Consumer research, you might think that's quite low. The reason why for EC it would be relatively low is because we can do a lot of A/B testing. So in the first 2 to 3 months, you're doing research because you're creating different types of content. You're taking different products and you're changing different prices, and you see what works. So you see what consumers start to buy. So that is actually part of the consumer research, and often then it can be revisited. In terms of localization and branding, again, not changing everything, but trying to get something right that fits the positioning that you need to have in your landing pages. Now, the major budget that you can see here, and this is really the point of this, is at least 60% of your budget should go on brand amplification. So that means invested in something that will get you more exposure, because although China is a big market and a huge opportunity, it's also competitive, and there are a lot of brands that are bidding for exposure. And it is an exposure that gets your first clients, that allows you to then grow your e-commerce store. And you can see I split it into 2 different elements. You have in-app marketing, and then you have out-of-app marketing. So in-app marketing is essentially all of the Tmall tools that are available. And then your out-of-app marketing is everything else. It's your media, it's your KOLs, it's anything that essentially drives the Tmall store. So generally in the beginning, e-commerce in-app marketing in the first year should be higher, but if you don't have a combination of them both, you will find it very difficult. And then so discounts and promotions, this is always the big question for e-commerce. And generally, our answer has always been that yes, China is a premium market, you can charge more, but everyone in China loves a discount too. So there's a little bit of both elements there. So what we generally say to brands is, it's better to price a bit higher when you first come in, because you need to understand with the way that Tmall works, you have essentially A, B, S, and S+. You have 4 pricing tiers. And so A essentially is going to be the price that you probably never sell at. You'll see it on Tmall, it has a line through it, and everyone's constantly discounting. But that would be the higher price. Then the one underneath would still be a little bit higher than what your retail price would be. And then you have 2 other prices. S Plus essentially is the lowest that you would go without losing money, and you save that for live streaming and for your double 11, double 12. And then you need to have another price that would just be below discounting. The discounting is quite important, and that's something as well that you need to take into account of how high or low you go. In terms of KPIs, that's the other thing as well that's difficult. It's a question of, do I build awareness or do I try and build sales? The answer really is both. You need to build awareness of your products to get the 8 touch points, but then you also want to get first time purchase, because if everyone sees a product but never tries it, that doesn't really help with the P&L. So I think it's looking at the strategy and looking at each of the initiatives that you're putting forward, and then deciding what will support what function. And this is different example of KPIs. Obviously, this is all for media exposure, but different things such as KOC seeding, so sending products out to KOCs can give you a certain amount of notes. We've got promotional tools, you've got media buying, and then you also have KOL engagement. So without paid media promotion, you'll also have issues with your own media, right? So your Wechat account, all these other things. Paid media supports both your own media, your official accounts, and it supports your EC stores. And if we look at different media platforms, this gives you an idea of really how you can support them. CPS partnerships are always the best in terms of how you can sell. And obviously with the likes of Douyin live streaming and Kuaishou live streaming, that's a very conversion focused element. One thing that's missing here is Tmall live streaming. They're all conversion. They're not awareness. It's about getting products sold and out into market. Wechat KOLs, although quite low in terms of CPM, generally have quite a good return on investment when linked directly to stores as well. So that's something that we'll often work with. Their exposure is not great, but for sales, it can be quite good. And then if we look at, for example, the metrics, this gives you an idea of around what you can expect for each type. If we look at e-commerce, sales are about growth in the first year, right? So general expectations are GMV being your general merchandise value for that year, that you should invest between 10 and 50% of what you want to achieve. So if you want to achieve 10 million RMB, you should be putting between 1 and 5 million RMB into that account. And generally for most brands, it sits around the 20-30%, if I'm honest. That's something that will lower year on year, right? And that's where the investment comes into, that's where the repeat purchase comes in, and the organic traffic, the traffic that gets given to you by Tmall and JD. And the sales expectation, again, yeah, I think this is a little, I think it should say, sorry, I think I missed a zero there, but it should be 500,000 to 15 million. So lowest we've probably seen on a Tmall store would be around 50,000 RMB a month. And then the highest 15 million in the first year. So some brands obviously take off very well and do quickly, but there is a big variation depending on price points as well. Mini programs are generally a little bit harder. So if you look at, for example, Yotan, 50 to 200% investments needed for a 10% return in merchandise values. It's much more expensive, much more expensive in terms of what you can get back. And then the sales expectation, if you're making more than 1 million RMB on a mini program, then you have a very good mini program. So they're generally a little bit harder as an investment. It's more testing the waters, being able to start and sell some products into market, or is that you have product in market and you have an offline play and retail and different things you can do. And then media, this is generally the cost impression rate. So this would be the cost per follower is generally very high. So if we look at cost per follower, so this is wrong. So sorry, each one of these is how much it costs to get a particular follower. Wechat is the highest, obviously 100 RMB per follower. Very expensive. And this is because it's a very closed ecosystem. But generally also for investment, most brands look for 100 to 200% investment for 100% general merchandise value. So you're looking at 1-to-1 or 1-to-2. And sorry, 1-to-1 or 2-to-1 in terms of return. So again, it's about equal. So e-commerce really helps the best. Now, live streaming is obviously very different. If you're working with high tier, the results can be in the millions of RMB working with just one particular live streamer. If you have a very good gig with Via and Li Jiaqi, you can be making, 20 million RMB in a particular stream. So what we'll do with a lot of brands is how do we get to that point? I think that's the most important element. And I'll quickly run through these case studies. So these are case studies of success. They're brands that have got there. And I know a lot of people think, well, they're already successful, but it's interesting to see what they did to get there. For infant milk formula, it's very hard. So sampling and product seeding is really the biggest thing that needs to be done. You need to get mothers trying the product, not doing very large campaigns until you've got to a certain level. So they started with these kind of smaller campaigns, working with 011, then they went to product seeding, and then once the brand got to a certain level, they started to use IP, so celebrity IP, that they could put all over the different types of marketing they're doing, and then finally they brought in live streaming with the large, the high-end, essentially, live streamers like Cherry and Via. So this just shows their expansion across all of the platforms I've been mentioning. So for most brands, it's picking one, often Tmall, but this is, if you're in mother and baby, for example, what a successful brand in China looks like after 5 to 6 years. So it's a lot. There are many different platforms that you can sell through, and they all complement each other. And that's really what, for brands, what they need to do is find a starting point and then map out across all the different platforms where they need to go from there. Brilliant. So thank you. I'm going to move to question time. I hope I wasn't too long, but thank you.
It was perfect, Ryan. Thank you so much. Let me just go back to the slides and we can go ahead. Before we do that, because maybe some people have to kick off, Ryan, in the chat box, could you put your contact details? Email, if you've got a WeChat ID, I will do the same as well. Just so that we can, in case people need to log off, they at least have our contact information. Let me put that in.
Okay.
Awesome. So now we're on to the Q&A, and I have one comment, and I'd like clarification. And obviously, you can only talk about what you do at RedFern Digital, but it sounds super labor intensive, all of this. I mean, the amount of work that has to go behind doing all of this. And I think what I would be curious to know about is, what does a TP do? What does the brand do? Or let's say you're using a distributor to do this. What does the distributor do? And what does the brand do? I mean, the issue is that I think there are a lot of smaller brands that are coming on here thinking, well, first, I might not have all the financial resources necessary, but I may also not have all the time available to really kick this off and make it successful. And I feel from your presentation, Ryan, the first year is critical. If you don't get the first year right, you're not going to scale. So in your case, what does a TP do? And what does the brand have to do? And how does the brand get involved on a day-to-day or month-to-month basis?
Yeah, it's a good question. I guess first there's a number of different models, right? And depending on the model, the interaction between distribution, the TP and the brand's different. So if we take an in-market model, say for most of our alcohol brands we work with, there's a distributor that essentially will help with logistics and they'll lock onto the store. And then we would manage all of the promotion and all of the customer service. And then the brand would also be there in terms of making sure the branding's correct, relationships are running well between distributor and TP. If it's cross-border, then generally it's brand and TP. There's no distributor. And so, yeah, they're really the two major situations. And so with the TP, a lot of the work is really on design. So you'll do different types of banner ads that you're creating every day with media like WeChat push outs and working with the KOLs. You can plan months in advance. But with e-commerce, you'll suddenly get.
But who plans that? Is that a media agency? Is that the TP? Is that the brand who takes that over? Like who does that planning?
The TP and the brand, yeah. So kind of in the beginning, you agree, okay, what are going to be our festivals and what are we going to take part in? And that's really a decision between the brands and the TP. And then you put in forecasts on sales, right? So you'll say, look, for this month, we're going to take part in this festival. And then this month, we're going to do this live streaming. So there's a lot of planning that goes on between them both. And then usually what we do is we'll agree, because it's very difficult, especially with time zones and all sorts, if we need to push something out, getting the brand to okay the content. So we'll agree in the beginning on style, brand guidelines, how things need to be positioned, so that essentially when there's a campaign, we can create banner ads and we can do things quite quickly and lock in live streamers, just because things go quite fast. But there's, usually it's like you'll plan 6 months in advance, and then every month review, look at the data, what worked, what didn't.
So this is the thing about data. What I loved about your presentation is actually you've recapped literally what Annie and I said throughout the last 3 days. So I love that we're all in sync on all of this. You mentioned data a lot, and it seems to be a very fundamental point when you're doing e-commerce. Could you touch a little bit more on, like, do your clients actually read the data, or do you force them to read the data? Do you go through the data with them? Like, how does that work? I mean, from let's talk about practicality, right? Do they do it, or is it more you guys are doing it and then instigating the next actions?
A bit of both. Usually in the beginning, so the first 2 months are very critical, because you're doing a lot of the A/B testing and you're using different types of KOLs on different platforms. So figuring out what works. Like if I go back to we worked with a brand from the UK, a tea brand, right? And with them, not very well known and not really a big brand, but they done quite well. The first month was really looking at what is the right platform. So we went on Douyin, Little Red Book, Wechat, and then we were all connecting this to Tmall. And what we found very quickly was that people on Douyin were saying it's quite an expensive tea. We're saying, why would I buy, I live in China, why would I buy British tea at 7 times the price? People that were on Kuaishou were just ignoring it completely because it was way above the purchasing power of most people on that platform. And then so we had 2 platforms. We automatically went, okay, this isn't working. And then we did live streaming, but the brand doesn't like to discount a lot. And then so no one was buying it. And then what we started to see was by the end of the 2nd month, that these associations that were focused more on like art and minimalism and style on Wechat, we're getting 1 to 5 conversion. And we thought, wow, this is great. So it's kind of the first 2 months, you definitely go through a period, brand and agency, where you're looking at what's working and what isn't. And the other thing with that brand, we weren't actually doing the EC, they had a distributor, right? Because we also run media. So in that situation, we were taking the data, our EC team, from the distributor and going, oh, this is working. And that's important as well, because we need to know what's selling, right? And so they have that level of data. So that was an interesting relationship as well, because there was another distributor involved that was actually running the store. But the first 2 months were critical, because then for the next 6 months, we were just looking for this kind of minimalistic art kind of, groups that were all over Wechat. And we were just targeting them very heavily, and the brand was fully behind that.
And how, there seem to be a lot of ways you can get into the market, right? But for a brand, they might start off with thinking that a Wechat mini program, I get the impression from you, Wechat mini programs are not a great start. Tell me if I'm wrong.
Yeah, they're a tough start for a lot of brands, because generally they're quite closed. Because
they're closed, it's a closed ecosystem, right? So do you have any brands that you work with that counter your efforts?
And what would you mean? Like,
well, like you're the TP, so you're managing the supply chain and whatnot, but then you're also in the shop, but then you're also doing the media stuff. Do you ever have brands who do things outside of that scope on their own, trying to think they can do it better? Obviously, for me, it would defeat the purpose, but I could imagine that there are brands out there who are just trying to gain traction in any shape or form. And do things outside of what you're doing. And then, so how would that affect them in any way?
We still set up mini programs. So we're still being told to set up mini programs, definitely more than Tmall stores. Even though we suggest Tmall stores. Yeah, I think it is good for testing the water. And it's a control, it's a cost aspect, I think, because if you're looking at Tmall, you're looking at really $1 million RMB, right, to push that platform. That's your annual kind of go. Whereas I think it's a risk element of, well, I could do it with a mini program, I could set it up, I could probably do it in a year for 200,000 RMB or 300,000 RMB, and have that looked after. And if it doesn't work, it doesn't work, and then I leave it. The question becomes that it's upsetting because if that doesn't work, it doesn't mean your brand won't work in China, right? It just means that isn't necessarily the right platform. So that can be a little frustrating, but yeah, I think brands still do it. And some brands, to be fair, that we've worked with, we have set up mini programs and they've done decently well, just because they had a stickiness. So the problem with mini programs are quite hidden. So if someone goes back and gets into the habit of going back to your mini program and buying again and again, it will work. But the question is, will they, right? I think that's the major point.
Well, let's look at some of the questions that have popped in. There's one from Ling Jiang who's asking, what platform is good for industrial products?
That would be, that's a good question. It depends on industrial products. We're seeing more and more, I'm just trying to think now, like say water pumps was one of the brands that we were working with. We're seeing more on Tmall and JD. Now, it depends if this is a kind of B2B2C play. So I met with Schneider Electric, I think it was about 3 years ago, and obviously they sell mostly to electricians. And so what they had done is they'd set up a CRM system on Tmall so that all of the electricians could buy directly from Tmall instead of going to them to centralize it. So industrial products are definitely sold on Tmall and JD. If it's very B2B, then you have Alibaba.com, which is the B2B platform. And that's essentially where you'd sell large volumes of a particular type of material or product. So that can be better for very industrial products. If it still is consumer facing, then Tmall would be the best one to look at. Yeah.
Joanne is asking if there are any social platforms specific to men.
That's a good question. Probably if we're doing marketing, we would focus on Douyin and WeChat for men more. Yeah. The Douyin, WeChat, and sometimes Weibo, depending on the age demographic. Weibo is generally a younger age demographic. WeChat encompasses all age demographics. And then Douyin is a younger but male, quite male-focused platform. Yeah.
So Ling Jiang and Joanne, I hope that answered your question. If you've got any further ones, just type it in. And then John has a question on, are there any resources with lists of different TPs which are particularly relevant for different product categories? I guess the question is, are there TPs that are product specific?
There are. There's a list that Alibaba provide now. With that list, do take in mind that it's ranked by performance, how long the TP's been around. That also means cost. So you can go. The number one would be Baozun, and so the second one is probably NetOps. These are, but they'll charge 100,000 RMB a month service fee potentially. So. Be careful with that list because there's a lot of great TPs that don't even list themselves on there. You don't have to be a TP to list there. So really, I think it's about looking at the team that you'd work with and their experience. So for example, in our team, the directors, we have 2 directors from Baozun, 1 director from NetOps. They're all from the top ones, but we don't charge 100,000 RMB a month, right? So I think whatever agency you want to work with, there is a list, but the due diligence is really, okay, who's my daily contact? Who is the head operation person? Because the way that the team works is you have a designer, and you'll quickly see if the design doesn't work because it'll be all over the page, right? So sometimes I think in part of the proposal, asking them for some simple designs on how they think the store should look. Then you have an operations person. They're very important. They'll essentially be the people that do a lot of the promotions for you. Customer service is nearly always outsourced. So Alibaba have a list for the TPs, which is appointed customer service representatives that have agencies that you can then outsource to, and they have ratings.
How does that work? Because you were mentioning that for customer service, the questions that are coming in are really about, well, ingredients, brand, like it's not so much the the product didn't work, I want to return it. It's really how to use the product or how to.
Yeah.
So who's training? There must be some form of training involved for those customers.
There's very intensive training. Yeah. So the first month, we have like a very intensive training program with the customer service agency. And usually we give them like a 30-question guide that covers most questions. Now, as soon as whenever they get something that is outside of that, it folds back onto the TP. So it's something that's outside of them 30 questions, or it's outside of their training, there's a backup. It automatically will fall back onto our system, and then we can deal with that inquiry.
Okay, understand. Well, those are all the questions that have popped in. I guess a question that I had also, just to sum up the idea between going on an e-commerce platform versus doing a mini program. So you were saying that going on the e-commerce platforms, it's expensive initially because of the high deposit amounts. Mini Wechat programs, or the mini programs, not expensive to set up, but I imagine you still have to spend money on the media program.
Exactly.
Right? So
yeah.
Does that match? Is the deposit that you have to put in matching to the push you have to do from a media perspective to get people into that private ecosystem?
It's more difficult to predict because with media, some posts go well, some posts don't. You have to think about the fit with the KOL. Whereas with Tmall, the tools are more specific. So you can better say, look, we're going to aim for this type of sales. The problem that we have with mini programs is we do have brands that break even, and it was quite a good venture, but you've got to invest a fair amount to break even, but you can end up losing more technically, because some brands will invest the data you can't get. We might be pushing different campaigns with WeChat KOLs on a product that maybe it's too expensive for that category, but we don't know because we're not able to pull that data back and do different testings because they don't have the tools that Tmall have. So that's the other frustration with mini programs. Right. Is sometimes it starts to fly and it does better, and sometimes we're struggling to understand why we're doing these push outs and that it's not selling. And research does help that, but it is definitely a riskier investment in when it comes to the marketing side, because you just don't know how it's going to pan out. And the other thing is the consumers, and we've done this before because we'll use similar KOLs that we've used before for a brand, and we'll have used them for their Tmall store. We'll go back, use the same KOL in a mini program because they just opened it and we had a really good experience with them, and the sales are always lower because there's still, from the consumer, is some apprehension of, when's my product going to get delivered? Can I trust this mini program? Whereas Tmall's Tmall, right?
Standard flow. Yeah.
Yeah.
Interesting. And yet you're still setting up more mini programs than you are Tmall accounts.
Yeah.
So is that because brands have a more short-term vision than they do of a long-term one?
Yeah, I think it's a test the water kind of mentality, right? And it's quick, it's easy to set up. I
still go back to your point of, even if it fails, it doesn't mean there isn't a market or opportunity for that brand in China, and that's a pity. So you'll have a bad experience with the mini program, it leaves a bad taste in your mouth, and then you exit.
Exactly, and that does happen. Sadly, that's something that it happens quite a lot. Whereas a true test for the market would be going through a larger store and targeting different types of demographics and doing different types of displays. I mean, that would give you an understanding of whether it will work or not.
So do you have the ability, Ryan, to give a ballpark figure of what's needed for that initial investment to get up on Tmall?
So you have the...
I know it's product specific, but I'm just talking about like a ballpark figure when you're talking about setting up store, getting running for that first year. Yeah.
So really you're looking at, say your deposit's around 50,000 RMB. If it's one of the food and beverage ones, then you've probably got a tech fee, which I think is around another 40. So you're about 100,000 RMB in what goes into the platform. Obviously some of that's refundable. Then you need to look for TPs. TPs range from about 20,000 RMB a month to 90,000, but I would look for one for around 30. That's quite reasonable. And then so that's 360,000 over a year. I'm not going to take into account commissions. There's probably about 5-6% between the TP and then also the platform. But then that would be 360, 460. And then the biggest spend, as I mentioned before, is going to be investment into sales and into marketing, which will essentially get sales. And that's based on metrics of 1 to 10 or 1 to 2 being the lowest, right? So depending on how well the product flies, you can invest more or less and scale that. But I mean, if you're wanting to do millions of RMB, you probably would want to invest 500,000 RMB into that platform. So you're probably looking at 800, 900,000 to do it. Yeah.
And that's just in terms of operating. I mean, like you said, you have to still think about your IP protection, trademark registrations and whatnot. And any administrative things you've got to think about that you might need on the ground and or even in your head office, right, to manage this.
Definitely.
Resource or things like that.
And trademarks, 100%. They're the biggest issue because that's another problem of wanting to sell in China. We've gone through a few stages where we'll have got to the point of we're ready to go, and then it's like, okay, trademark documentation, I don't have it, go check, and then you can't get through. So that's there's a number of different things that need to be addressed first, for sure. Before
going in. Well, let's leave it there. Ryan has provided his contact details, or if you would like me to do an introduction to Ryan, let me know. You've got my contact details as well. Ryan, thank you so much for popping in. It's been fantastic. I really enjoyed the presentation. It was a great sum up for the whole week. So it was fantastic. And for everyone else, if you want to recap the session, because there was a lot of information, the recording will be up on our YouTube channel by the end of today. So everyone will get an email with that link as well. And then just to finish up, it's to update everyone on our next month's webinars. So we've got the China roadmap, which is July 13th, Tuesday, July 13th. And then at the end of July, we're going to do a series on getting ahead of the growth opportunity. So thinking about how to save your brand. I'm going to be talking about brand protection once again, how to set up a company, how to work with your China accountant, recruit your first employees, and how to manage your corporate management team. So if you're interested in that, go to woodburnglobal.com/events as well. So again, thank you very much, Ryan. It's been a pleasure.
Thanks, Christina. Thanks for having me.
Great rest of the week. And see everybody very soon. Take care and goodbye.
Brilliant. Thanks, everyone. Thank you.